Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions. $1,000,000 question is where's the bottom? Or are we in the bull? Are we trading in the bull market or are we trading in the bear market? Right? That's you turn on TV. That's all people talk about it. You search on Google. Those are the most common questions. So we need to try to address them. Bio. For those of you who are new, do me a favor, type in first. Always want to welcome new subscribers, so please type in hello inside of questions. Don't be shy. When people don't participate, I get a little nervous. So help me out. So say hi. For those of you who are returning subscribers, really appreciate your time. The fact that you guys here makes me very happy. So thank you for participating. My background is technology. I have bachelor's degree in biochemistry. I have master's degree in computer science, specializing in statistics and artificial intelligence. I wrote programs over 5 years ago, actually based on neural networks and artificial intelligence. So I really enjoy that part of the job. We have a team of financial engineers that are constantly building new models, using new networks that are available with all the, generative AI and all the advances. There are literally every year there are new, research papers, new frameworks that have been built. So it's an exciting field, and I'm glad being part of it. Was part of several financial startups here in Chicago. Some of them went public. I decided, since I'm in financial and fintech industry, work for a few broker dealers, I'm going to manage my own money after being disappointed with, Fidelities and, Wangers of the world's money management. So I've been doing that for over 20 years and mentoring and teaching subscribers. So that's my background. The disclosures are very important. Please read them. There is definitely risk associated with trading stock and options, and might not be suitable for everyone. So I encourage you to visit options. If you're new, please visit optionscreening.com. This link on your screen, pause the screen to read the remaining disclosures so you can understand the risk associated with trading stock and options. Again, I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level. For general education information purposes only, please consult your financial advisor prior to making any trading decisions. All right, before we jump into a trading plan, let's talk about current market conditions. Stock Forecast Toolbox, right? One of our main models basically says that market is oversold short term. It should rebound at some point. It does see 408 to be support, 413 overhead resistance on spiders. We're exactly at the 413. And 408, 404 is an extremely long-term support, right? And I would say that's the division between going back to game theory, right? The idea of game theory that you have market participants, right? Some bull, some bear, some neutral. And right now, if you were a bull for the past 2 years, you remain a bull, right? If you were a bear, you remain a bear, right? If we drop below 400, 404 level, I think there will be a mental shift where a lot of bears will get bolder, right? Because they got beat up in the past 8 months and they want revenge. And the bulls are going to question their, no landing kind of, recession, is not coming. They're going to question that narrative, right? They're going to question the narrative whether, on the low unemployment and resilient economy is enough and justifies the current evaluations. Model doesn't have any feelings. It just looks at the price action, right? Don't fight the tape, don't fight the Fed. Those are the two most important rules that I have on my desk, on my wall. So I encourage you, you have a written trading plan where you write these rules. But in terms of tape, still bullish, 408. I mean, short term we are bearish, but model turning bullish, basically saying that the market is oversold 10 days. If you look at the 6 months, bull trend is still intact, right? The bull trend is still intact. We did trade below 427. Model predicted that October will be 427. We're at 413, so we are about 2% below predicted low. We have seen in the past 8 months or even 12 months, that market tend to overshoot the extremes, right? On one hand, based on any technical indicators, we're oversold, but you don't know where the market stops, right? And we've seen it as much as 5%. 5% of 427, that's 20 points. So again, 404, 405 seems to be an extreme, and I would say we are very close to the bottom, right? We're very close to the bottom from technical perspective. But you do need signs of reversal, right? And right now, even though the model is bullish, I don't really see many signs of. Give me 1 second. There are no, right now, there are very few signs of reversals or capitulation, right? The bear argument, the bull argument market is oversold and earnings are better than expected for the most part. Intel is up 10%, Amazon is up 7% after earnings. You have Capital One Financial. Let's put this back. So, up. So for the most part, earnings coming in better than expected, or at least in line with expectations, right? And you do have a strong rebound. But on the other hand, regional banks are down 1%, banks are down 1%, and we do have yield stubbornly high, right? 30-year at 5, 2-year at 5, 10-year very close to $5, close to 107. So you don't see signs of reversal, right? So to call the bottom and say that 404 is the bottom and I'm going to start buying, probably too early, right? We need to see next week. We have Apple earnings, which I don't think is going to make or break the market. We do have a Fed meeting, right? And if Powell says, higher for longer, the resilient economy, we're going to be data driven, basically same narrative. Well, lately market hasn't responded well to that narrative, right? And even today, you can see we had better than better than expected inflation. Inflation is trending down, but months over months higher than expected, right? Months over months inflation is higher than expected. I think it came in as 0.4, and at least the services component of the PCE is a little bit harder, slightly higher than expected, meaning that strong, resilient economy, consumer spending, despite the price pressures, and interest rates are, not dropping. So until interest rates drop at least till below 4.8, and I would say at least get to 4.5, the probably bottom process has not started. We need to drop below 4.8 and probably reach 4.6 before we say, okay, we see signs of bottoming process, right? And 404 will hold, right? So that's my view on the market. So you look at the spiders, right? You go to this level, right? We're not making, we'll see where we're going to close today. We're at 412, below 200-day moving average, right? There are 3 scenarios, right? One scenario is that interest rates will drop, dollar will drop, Fed will not going to be hawkish, and we're going to start a discovery process, right? Model has been down as much as 5%, so maybe next week another leg down, right? And then, the Christmas rally, right? And maybe we get somewhere between now and since Christmas, somewhere 440, maybe, we can overshoot. 444 is the next level, but at least get above 50-day moving average, right? So that's scenario number 1. I doubt we're just going to trade sideways for the next months or so, right? Kind of just stay below 200-day moving average. Probably doesn't happen. Sometimes it does, but most of the time, because market is so oversold, it's either rebound, right? Or, we have geopolitical risks, right? War in the Middle East and potentially shutdown in the government. There's new House Speaker of the House, so that's good. But, potential government shutdown that also can weigh on the market. So too, and we're heading lower. right? We break through this key support 400. This would be May low, right? Because if we break through this 404 May low, well, the next level is 380, right? So that's kind of, I would say, support number one and support number two. Okay, so support number one will hold. Number two, support does not hold. Why do you need these exercises, right? A lot of people ask me, Vlad, why do you think negative? What's the purpose of thinking negative? You got to be optimistic. Optimists live longer. They have a healthier lifestyle, happier. There's only one reason why you want to go through positive and negative scenarios, right? To find this anchor point, right? Stop loss. What is a stop loss? Is the anchor point, right? I've been quoting prospect theory, right? Prospect theory and Thinking Fast, Thinking Slow book. The idea is that we're all risk averse and we need to have anchor point. And to me, anchor point in trading just means that you always trade the same position size and you get used to that position size in terms of downside and outside, right? Let's say it's $500, right? You always make $500, you always lose $500, right? And your system generates 60–70% probability of success. So you can have 3 good trades and you can have 5 bad trades, but over a long period of time, you're consistently making money, right? Because you're risking the same amount and so on, right? Some people are not happy with that system. They want, the risk $500 to make $1,000. Great. Based on the research and statistics, you're probably not going to be even 50-50 correct, right? Most of your trades will be unsuccessful. More than half of your trades will be unsuccessful, right? Otherwise, you wouldn't be on this webinar. So then, which is fine, you can still make money. You just need to make sure that, right, it's close to 50%, maybe 40%, or 35%, because you want to make sure that the aggregate number of successful trades exceeds the aggregate number of losing trades, right? So this anchor point makes you kind of the idea that you're not going to have regret, right? The author of the Thinking Fast, Thinking Slow, who, Coleman, who got Nobel Prize for prospect theory, basically talks about that, you do have to have an anchor point and you want to avoid these future regrets. For me, the biggest regret is I'm down more than the amount that are my anchor point, right? And again, usually I say $10,000, no more than 2.5%. That's $250, right? $250. But again, $250 for me feels and invokes emotions different from everybody on this broadcast. For some people, it's less emotions. For some people, it's more emotions. So you have to find your own anchor point, right? Based on your own background, the way you were raised, your financial situation, and et cetera, et cetera, et cetera. So once you find that anchor point, then you can trade, right? Consistently successful because you know what's at risk and you understand it, right? You have that anchor point and you can avoid that future regret. So how do you find that anchor point? The only way I found is through this positive and negative exercises, and some kind of level the anchor, right? Like right now, if you, let's say, bearish, right? You basically say, Vlad, no signs of reversal, I'm bearish. You can say my anchor point is this line, right? We've traded through this 200-day moving average. As long as we're below 200-day moving average, I'm a bear, right? I'm a bear. So that's my anchor point. So we are at 412. Let's say this is 424. My anchor point is 22 points, right? If I'm shorting the market and I'm risking 22 points, right? Let's say $250 is the amount of consistent, always the amount that I'm willing to risk. Okay, I'm going to sell, 10 shares of S&P because, banks are going lower. Fed is not going to say anything positive, and that's my anchor point, right? I'm down. If the market does reverse, let's say Apple hits a home run and Powell sounds dovish next week on Wednesday, and market jumps above 200-day moving average and above average volume, am I happy? If I just shorted it, probably not, right? I'm not happy, but I understand that's the risk. That's part of the rules of trading, right? There's uncertainty involved, and that is my anchor point, and I'm okay. And I wrote it down in my journal that, you know, if it jumps above, you know, 444, sorry, 424, 425, you know, I'm out. You know, I'll be probably market neutral, not bearish. So that's on the bearish side. On the bullish side, same thing. You can say, listen, Vlad says 400. It's not going to drop below 400. You know, I turn on CNBC and Bloomberg. I read Goldman Sachs, Morgan Stanley research. They all basically saying, well, it's never going to, I mean, they said it's never going to drop below 420. Worst case scenario, 404, right? Okay, so you have your anchor point, right? If you want to get bullish, you can say, okay, I think this is enough of this. I think next week we're going to have a huge rally. Okay, you have 12 points to the downside, right? You can say, I'm going to buy the market at 412 because I'm a long-term investor, and you know I love buying below 200-day moving average. It usually works out well for me. Great, your anchor point is 12 points, right? If we drop below 400 points, you know, and you're down more than $250, you have to respect the price action. Basically, say, listen, something is happening in the market. Maybe it's geopolitical risks. Maybe it's something else. Maybe earnings don't justify the current valuations. I'm out because I don't know where the bottom is, right? It could be 380, it could be 350, right? I just don't know. So these anchor points are very important, right? Not just stop losses. The anchor point in this discussion of prospect theory is your emotional attachment to the trade, right? Going to, he's also mentioning endowment effect, right? Endowment effect is this emotions that you have, you know, that you fall in love with the trade, you can't let it go, right? And you cannot do that, right? That's one of those, you know, cognitive dissonances that are very important to avoid. So that's why positive and negative visualizations are very important. This is why I do them every live trading room session. If you don't do this, I encourage you to do this, not to be positive or negative, but just realizing that we are wired to avoid negative feelings and emotions. And most of the traders don't, especially in the beginning, they don't even think about stop levels or how much is the worst case scenario risk. And if you want to be a trader, you have to think like this. If you want to be an investor, I mean, it's hard to invest right now because in the past 2 years, market didn't go anywhere, right? So if you're a long-term investor, kind of buy and hold, you're probably flat in the past 2 years, right? And more likely than not, you're down, right? More likely than not. So you have to think like a trader, because we're in a trader market, and probably in the next 6 months, we're still going to be in traders market, right? We're going to have these 20% rallies, and we're going to have 20% sell-offs, right? And it's just something you need to expect. All right, so based on the discussion, let's just go through this exercise together. How many of you say 1? We're very close to the bottom. Maybe it's 412, maybe it's 400, maybe it's 408, I don't know, but it's close enough for me where I can go along. And I love Christmas, great time of the year. Everybody's in a good mood, and we're gonna have a Christmas rally. So that's 1. Number 2, you know, escalation in Middle East, oil prices are collapsing. There is a sign of, you know, recession is looming, and evaluations do not justify current credit environment where interest rates are elevated and stay for longer. Nobody knows whether they're going to be lowered. Everybody thought by the end of this year they're going to be lowered. Now everybody thinks it's going to be lowered by the end of next year, but in reality, nobody knows. Right? In reality, you know, even Powell doesn't know whether he will or will not lower interest rate next year. Right? He admits that. So 2, right? We're heading lower, and we're going to break 400 level in the next, you know, few weeks or, you know, this year. Scenario 1. How many of you say scenario 1? How many of you say scenario 2? John, yes, we are updating our AI system. So please type in your questions. I will be more than happy to answer them. It's very important to do that. Ray, thank you very much for being here. Right, a lot of people are subscribers, a lot of people are not subscribers. This is general education. This is for free, right? Hopefully you're learning. We do have a YouTube channel, so there's a lot of videos on YouTube, find Tradespoon, and if you haven't subscribed, please subscribe. You will get a lot of free content and free education. Hopefully you can be advocate of Tradespoon and share those videos on YouTube. Major improvements, we do find new models, right? I mean, you have to develop them, you have to back test them, you know, then I have to trade them. So it's a long process, but we do have new models. You know, we don't build new services, like aggressive power, active trader or weekly trader, but behind the scenes, the models that we are finding, if we find something better or better suited for current environment, we do that. All right, Peter 2, trader 1, 2. Kevin, depends. Let me qualify 1, I hope. Yes. The good news is that, before, at least when I start trading, before I met, Dr. Maneker, or I start believing in trading psychology, I thought that there are some people that can actually predict where exactly the market is going to stop, right? That there are some people that says, okay, it's going to stop at 404 or whatever, at somewhere between even 404 and 410, right? You can have an opinion. A lot of people have opinions, right? Like I am a very opinionated person, so okay, I have an opinion that it's going to stop at 400, 410, but I have no idea whether it will or will not. I can assign certain probabilities. I can look for data, but nobody knows, right? So that is the biggest revelation. At some point, you just have to accept that as a fact, right? Because if somebody knew exactly where the, even at range where the market is going to stop, they wouldn't, they would do something different. So nobody knows, right? People can have theories. They can look at the data. They can, invest based on those opinions. They can invest a lot of money based on this opinion, but that doesn't mean they're going to be right, right? So that helps you deal with the market movements with an open mind, right? You don't, put pressure on yourself. You don't put pressure on other people, right? You don't blame other people. You don't blame yourself, right? Because when you start getting emotional and blaming, usually people don't blame themselves. They blame Vlad or Tradespoon or, moderator or some speaker on Bloomberg, right? If you do that, then, you're still kind of early in your journey as a trading, and you got to rewire your brain to kind of realize that nobody knows exactly what's going to happen. And people look at data, right? They look at the data, they look at different models, right? The author talks about, when you hire someone for a job, right? I used to hire developers. I still hire developers. I've been doing that for 30 years. Hire many developers, right? And that you're faced with uncertainty. Ultimately, no matter how many developers I've hired, I don't know if that developer is going to work out for 100%. Right? When a doctor performs surgery, they can look at all the data and all the symptoms. They do not know with 100% certainty that surgery is going to be successful. Right? There could be, 90% success rate, 80% success rate. But if it's complicated surgery, you're not going to have a 100% success rate in hiring a developer or performing a surgery. Right? So the best way to approach these challenges, when you face with uncertainty, the author of the book basically says, build a system, right? Look at 4 or 5 attributes. When I hire developers, I would look at, years of experience, right? What school they went to, right? Where they got their degree. I look, ask them questions on database design, on UI design, on backend design, and, how much experience they have maintaining production environment, continuous integration and stuff like that. So I build these 6, 7 categories. I assign value from 0 to 100, and the candidates that gets the best value, that's the hiring decision, right? If I look at somebody and and they speak well, and I just go with my gut feeling because they just look pretty or they say the right things, then most of the time I'm probably not going to make the right decision, right? And just because you look good and you write well and you communicate well, that doesn't mean you can maintain production environment, right? So trading is the same thing, right? You look at different attributes, you assign a score, and the highest score, if it reaches certain threshold, okay, you're in and you're participating in the trade. All right, my vote is going to go to 1, right? Most of you said 1, some of you said 2. I'm going to go with 1. Obviously, I don't know, right? Especially if geopolitical war escalates or if interest rates are going to continue going higher, then we're going to have 2. But I don't think that's going to happen. So you will find that I'm trading based on scenario 1. I'm closing my bearish position. Probably if we reach 404, 408, I'm going to close all my bearish positions, right? Maybe even start adding to some of my bullish position. And then I have luxury to change my opinion, right? If I do see that the market drops below 400 for a couple of days in November or December, well, I'm going to close my bullish position, some of my bullish position, reduce my bullish position, and increase my bearish positions. But until then, I do have a luxury of changing my mind, right? Okay, so that's an important concept. Please encourage everybody to kind of follow that. All right, any questions so far? Yes, yeah, thank you. There's definitely risk in geopolitical. Yeah, U.S. bombed certain bases in Syria, so I do understand the risk of geopolitical risks, right? But that doesn't mean that it will escalate, right? That doesn't mean that Iran will get involved in the war. I mean, it may or may not. I don't know what it is. Probably a flip of a coin, but it is what it is. John, when will the new AI be available to us? The models that we build are always we're not selling models per se, right? We sell services, and services consist of different models. And I want to make sure that the services we provide has value, right? So Stock Forecast Toolbox is one of our main models. We do make improvements to the model, but I don't create Stock Forecast 2 and sell it, right? Because there's only certain model. I mean, the point of the book basically says that you look at 4 or 5 categories or 4 or 5 inputs into your decision, and you always use them, right? It's not like I'm going to create 5 models and one is better than the other. Models should be just one input into the equation, maybe 2 models. Then you have to look at the dollar, you have to look at interest rates, seasonality, market sentiment, volatility. So you can look at different things. But just because you're looking at 3 different models don't know better than you do, right? They're just one of the inputs into your decision, right? So which models do we have? Stock Forecast Toolbox. When we do have a new neural network model that we think Google will work better than Microsoft for these financial, linear regressions and neural network learning on these new linear regressions. Okay, great. And we'll put that model. And you're not going to see the difference, right? I mean, the only thing you will see is just improvement in predictions, right? And we always put, what's the probability that low and high will hold, right? If you look at, 10-day prediction, 73% probability that the market is going to close somewhere between 414 and 408, okay? So right now it's 413, so far it's holding, right? Sometimes it can be, we were as high as 414, 415, but we're closing in between these levels with 73% certainty, right? So that's very important, right? Model grade A, meaning that, model is doing a good job predicting support and resistance based on our back test. So that's Stock Forecast Toolbox that, we discussed. You can have company screener, different screeners where you can see, which sectors may be outperforming, like aerospace and defense has been doing well, banking, chemicals, pretty negative. Everything else, some computer software companies are still doing, energy. So you can see which stocks are performing well and which ones are lagging, which sectors. So that's Stock Forecast Toolbox, right? So I encourage you to use it. I use it every day because these are my anchor points, right? 414 maybe doesn't make sense to chase the market. If it drops to 408 and I'm a day trader, right, or aggressive short-term trader, maybe it makes sense to buy at 408. We do have different, so the way I think about services that we provide is twofold. If you have a trading plan, right, if you trust the process, if you understand what I mean by always trade the same amount, always raise the same amount, mechanical trading, you've done this long enough that these concepts are second nature to you, right? Intuitive. Then we have models, right? We have active trader, weekly trader, monthly trader. Going back to John's question, these are different models optimized to analyze different time period. So you can use these services, right? Active trader, you know, it just gives you ideas, right? It doesn't tell you when to buy. It says basically right now there is no signals, the bullish signals, short-term bullish signals, bearish DHR, you know, bearish Goldman Sachs, right? So yesterday it sees already that financials and home builder, DHR is not home builder, industrials are, you know, under pressure, and you can see Goldman Sachs is going lower. We're giving you suggested entry price based on pre-market price action and target gain and stop losses, right? For day trading, short-term trading, I propose 1% is what you're looking for, based on the S&P 500 stocks or the stocks we're monitoring. If you go to weekly trader, you hold this position a little bit longer, right? If the market is oversold and you think it's gonna go higher, okay, maybe healthcare, Humana, maybe a Procter & Gamble, consumer staples, they reach the bottom. Maybe these are the stocks you wanna, if longer term, right? Longer term momentum, you know, 2 weeks, 4 weeks. These are the stocks that you might want to consider. And again, target gain 2.5%, stop loss 2.5%. A lot of people ask me, you know, what if it's 121.16 or 121.70? What should I do? If you're asking that question, then this is probably not the right service for you, right? That means you don't have a trading plan. You don't really know exactly how to manage your position, entry and exit. Then I would say, instead of looking for the models and output of the models, the better approach would be follow our services, our portfolio. So we have Elite Circle where you can actually see what I'm trading. You don't have to guess, right? So today it shows you, I close Iron Condor, right? I did Amazon earnings, I did Iron Condor, I closed it, right? And you know exactly, you can put your phone number and you will get a message exactly when I open and close it. You can see I'm start closing my hedges, right? I'm almost entirely closed SH position that I held. I'm closing short QQQ positions. You can go to positions and actually see, do I still have any of these positions left? And I still have short QQQ and SH because I think we're not done yet. That would be the example of the trades, right? And some of them are stock trades, some of them are long, some of them are short. You get your actions. The good news is that you can participate in the live trading room in the morning, right? Closing bell, and you can look at all of my trades. So if you still don't have a solid trading plan and you don't know exactly how to look at the chart and to decide when to get in, when to get out, signals alone is not enough, right? People have an assumption that you can get a signal and that's all you need. That if you think this way, then probably would not, please don't sign up for these services, like, for the models, right? The models, the idea of the models is that you have trading plan, you know exactly what you're doing, and you just need technology to help you go and trade valid signals, right? But if you don't have trading plan, you haven't done this long enough, then I would propose you follow somebody like me or somebody else who uses technology and has experience and trades, so you know exactly when to get in, when to get out, and you participate in the live trading room to help you decide that anchor point, right? That stop loss, right? The risk, right? That's all I talk about every live trading room. Every time I get in, I say, if you have $10,000, I would consider these entry points, these exit points, and this is how much I propose to consider to risk. Right? Some people can risk more, some people can risk less, but at least you know the game plan. So I encourage you to participate in morning bell, closing bell. If you cannot, right? Some people have work, some people are busy. Please watch the recordings. Every day there is a recording that explains exactly why I got into position, why am I getting out of my position, and this is extremely important. So if you're new trader or you're still kind of polishing your trading plan, then I would use the service. Some people have been on these live trading room literally 10 years, right? As long as we've been in business. So for them, they are still, experienced trader, but you don't want to trade alone. right? Even if you're an experienced trader. So I encourage you to still participate in this room. We share ideas, we bounce ideas, and two brains are always better than one. All right. Any questions on the active trader, weekly trader, monthly trader versus elite circle? Elite circle, you see stock and option trade. The robo investor, you only see stock trades. Premium portfolio, you only see option spread services. Spread, you only see spread services, spread trades. Shadow trader, you see all the trades, but you don't have access to our analytics. So in a brief summary, these are the services, but that's how it go. If you want access to live trading room and you want to trade together, whether you're experienced or non-experienced trader, know exactly when I trade, then that's elite circle. If you don't care when I trade because you have your own trading plan and you've been doing this long enough where you don't need help, okay, then I would use these. These are the models that we're constantly monitoring and producing output for different durations that you're comfortable trading. John, thank you. Thank you, John, for participating. Don, yeah, so Vlad's portfolio, basically it's elite circle, right? You do have elites access to our live trading room. You just don't have access to these picks and stock forecast toolbar. Elite, you have everything, but Vlad's portfolio, you can follow. It's kind of elite circle just without these models, right? So if you want to, have extra ideas beyond of what I'm trading, like active trader, bearish, you in Vlad's portfolio, you will not see it, right? You would not see Goldman Sachs. I did not trade Goldman Sachs today, so you will not see it. But somebody who's bearish and just wants to see which stock is going to continue drifting lower, okay, then then you would go to elite service. Kevin, yeah, I mean, I have not seen many research or somebody who says we're going to break 400 now. The research that I follow and I'm doing, I think we will break below 400, but just not this year, it'll be next year. But the main assumption and reason, no escalation in geopolitical risk, that interest rates drop, dollar pulls back, and earnings continues to drift higher, right? And from seasonality point of view, just going back to the sentiment that more and more people will have to catch up, right? We'll give up half of the gains basically, and some people didn't start until 420. So most of the money managers are probably down for this year, right? So they have to do window dressing, right? They have to do some kind of window dressing. So that's the assumption. So that's a popular opinion. You just have to be careful with popular opinions. Sometimes they don't work, but that is the most popular opinion and it is my opinion that we will not breach 400 this year. Next year, I think we will, but not this year. All right, any other questions? Meanwhile, 10-year yield, stubbornly high, right? It's still trading above this level, so that's bearish. Dollar is still above 106. Kind of following similar pattern, even though it's starting to pull back. QQQ is up 1%, semis are up 1%, value stocks are down, right? So you have this rotation. Yesterday, value was almost flat, but technology was down 2%. Today, value is down 60 basis points, technology. That's not an indication of reversal. This is just an indication of some reversion to mean, right? Some kind of consolidation and then follow through. So for now, I would say bears are in control, right? Short term, bears are in control. I would not try to catch the falling knife. I would just observe the data and make decisions based on price action. All right, any questions? In terms of services that we offer, what to expect next. Popular, AI stocks, we've seen Microsoft, right? Had a very good earnings, almost give up, actually turned negative yesterday. It's now slightly higher. So that's pretty bearish, right? It's trading above 50-day moving average, so it's good, but I would watch this level, yesterday's low, right? And so far, pretty disappointing reaction to what I would consider very good earnings, right? Very little to complain about. Amazon, also very strong reaction, up 8%, but extremely oversold, right? I've said that if there's any positive news and the stock is oversold, like Amazon, it does bounce back off 200-day moving average, and does it mean that it's going to make new highs? Probably not, right? Probably not. Same thing, you see price action in IBM, right? Hit 200-day moving average, better than expected earnings, hit 50-day moving average, right? Because reversion to mean, not because the earnings are so great, but because the reversion to mean. Because Google, you could argue, had great earnings, not worse than IBM, and growing is better, but it's down 15%. Why? Reversion to mean, right? It's not how good you're predicting the earnings data, it's how good you can predict the reaction of the price action, and stocks do revert to mean, right? And author in this Thinking Fast, Thinking Slow talks a lot about inversion mean versus expertise, right? A lot of people, even experts, right? A lot of doctors or money managers, or they think they have certain skill that they can predict in an uncertainty environment, right? That's one of the cognitive, dissonance, right? But in reality, it's a lot of the time it's just reversion to mean, right? So as long as you understand the concept of reversion mean, you want to be expert in your field and knowledgeable in your field, but if you attribute it to reversion to mean, it's good. If you think that in the face of uncertainty you can predict certain things consistently, then that could be a false assumption. Palantir, another strong AI, also has been weak going into earnings in 6 days, right? Lower highs, lower. It had a strong earnings, probably one of my favorite stocks, but so far it is. It has to deliver on the earnings, right? So it'll be like IBM, where it just jumps back to these recent highs, or it'll be like Google, where it just says something negative and continues to drop. Electrical vehicles, that trade is on hold, right? Tesla, below 200-day moving average, very weak. I don't know, Fisker. Some of them are, I think, doing a little bit better, but still, they have rallies and then they pull back, right? Fisker and IO. So pretty bearish for now. Energy, some of the energy name like nuclear, right? Energy, still in strong uptrend, right? Did pull back, but reverse. Some seems like healthcare, LLY, right? Weight loss drugs are still in strong uptrend, but also kind of cannot avoid the pullbacks, right? You can see kind of big pullbacks. A lot of people talk about consumer staples. I like consumer staples. I like them when they were here, but I like them even better now, right? Because for the past few weeks, they're not going anywhere, and a lot of people are turning bullish on consumer staples, right? You want to find bottoming process, like consumer staples is a perfect example where, based on the past 4 weeks not making new low, we're probably close to the bottom, right? Can we reach 65? Sure. Can we drop to 64? Yes. But little room to the downside because the bottoming process has started, but potentially large room to the upside, right? So risk reward, maybe you're risking $3-4, but to the upside you might make $10, right? 2 to 1 risk versus reward. So you want something like this in spiders and QQQ, right? Where in 2-3 weeks we're not making any new lows, and we're continue to grind higher. Right now, every week we're making new lows, right? So that's pretty bearish. All right, any other questions? Intel had a strong, yes. So there are a lot of positive surprises. And again, one of the main reasons is not because they had solid, great earnings. It's just, you know, they beat on the bottom line, they beat on the top line, they gave decent guidance, and that's why the stock is, you know, reverting to its mean, right? But at some point, it might revert to the mean the other way, right? Yeah, Tesla is looking for support. Yep, thank you, Kevin. Any other questions? All right, guys. AMD looks close. That's all I have for today. Thank you very much. You've been great, and hopefully we'll see you at the closing bell or morning session. Thank you very much. Have a great day. If you did enjoy the content, please go to YouTube, find Tradespoon, like, subscribe, and share. That would be greatly appreciated. Thank you very much, and have a great day.